with PPI coming in about 30 seconds, guys, and unemployment claims, we're going to react to see how this does. This could move pretty much everything. Again, the producer price index, another very key inflation data point. Let's watch in just about 20 seconds what the data comes in, and I will make sure to break it down as best as I can for you guys. If you could do me a big favor, hit the thumbs up button as we watch this news event. Got about 10 seconds to go here. Let's see what we get. All right, and the PPI number looks like it has just come out here. Dollar index slightly lower on the print. By the way, we also get unemployment claims right now too, so we'll take a look at both data points. Gold at least holding its gains for now. No big movements either direction at this time. Maybe a little bit of mixed. PPI came in very soft. Month over month. Wow, okay. So unemployment claims came in a little better than expected, just 220K compared to 226K forecasted. And PPI and core PPI came in cool. Very nice. Cooling inflation data confirmed this week through both the CPI and the PPI. This is the producer or wholesale prices. Yesterday we had the consumer prices. Both showed signs of cooling in inflation. Very nice. That to me continues to support my bias on things like gold and things like stocks. A weaker dollar continues to be my general outlook on this market. A weaker dollar and an economy for the US that is not in shambles like the headlines would have you believe, but may just be normalizing. We may just be seeing, we've been having these years of just exceptional US growth. Maybe we're just seeing some normalization. Let's take a look at GDP numbers just for a second, just to add some context to what I just pointed out. So you can see that US economic growth has been monstrous, above 3%. That's really good. Now, why do I say it's really good? Well, 4% would be obviously better, but 3%, why is that so good? Well, think about it on a relative basis. Other places like Europe, the UK, they're sitting in like 0.1, 0.4% GDP growth. They're not having growth pretty much. The US has got very strong growth. So there's this big exodus right now. Oh, I'm going to chase, the DAX. I'm going to chase. And it's not that I think those trades can't work. I think they've been severely weighted towards the US for a long time. There's probably some room for other stock markets to really maybe even take the lead this year. They have done so far. Chinese stocks, German stocks, European stocks are up way more than the US this year. US is down. So, when I look at this stuff, my point though is that there's this big bear party going on the US economy. Everybody's convinced it's going to go off a bridge. How many times, man, have I heard that in the last few years? The economy is going to go into a recession. Look, will it happen eventually? Yes. My dad's expression that he says sometimes is even a blind squirrel eventually finds a nut. And think about it. It's a funny image if you think about it. He's like running around. My point is, if people keep repeating, oh, we're going to go into a recession, oh, we're going to go into a recession, eventually you're going to be right. But how much of the market gains are you going to miss out on before you are right? Maybe the comical thing about, or not comical, but the difficult thing about being bearish, is that let's say this is the stock market and you are saying for so long, it's going to crash. 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 And it doesn't. And then you say it's going to crash and it does. And you say, haha, I was right. And then it does this. Were you really right? If you were bearish this whole time and it never even crashed below where you initially thought it would, were you right? No. This is my point. Now, I'm not saying you should chase stocks either. I'm not a believer in chasing indices higher, or even in this case, chasing gold when it's already towards those all-time highs. I think we want to be more constructive than that. We want to wait for pullbacks. We want to wait for opportunities. But again, this week we had good inflation data. I think that at the end of the day, there's a lot of tariff uncertainty, and I would not be surprised with a chart that looks like this if you do get a flush on the S&P 500, on the NASDAQ. Would not be surprised if another headline comes out and freaks everybody out. I think that if you're taking a look at the VIX, right, this is part of the reason I'm still holding gold, right? So I'm not short stocks, but I am long gold, and being long gold is kind of a defensive posture in markets, right? If you're long gold, you're betting that, well, you're not necessarily betting, but you're saying that, okay, I want to have some exposure to a defensive risk-off kind of asset in case there's some kind of geopolitical conflict, or there's some kind of fallout between the US and Canada, and they can't agree on anything, or something like that, right? So I am still long gold because I think uncertainty is very high.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edge Finder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
The markets are just never-ending sources of volatility here recently. I was talking earlier just about the VIX being up very high. This is causing all markets, currencies, commodities, indices, to move more than usual. And I want to start with the dollar today. I'm curious what you guys' thoughts are on this. After the big sell-off in the dollar, is there a big kind of up move headed our way for the dollar index, or is this just kind of a dead cat bounce before continued sell pressure? Marco, what are your thoughts on the dollar right now?
Yeah, sure. So let me take a look at the index. In my personal opinion, yes, there is a bit of a bounce, so it's better to look at the daily chart actually. A bit of a bounce, but if I'm just looking at the technicals, this is heavily melting down with a lot of selling pressure. So 3 very large bearish candles, a bit of a relief right now. But if you compare this momentum to these 3 candles, I would say the sellers are still very much in control of the dollar index. So I would be bearish on the DXY. So yeah, that is my opinion. In terms of the dollar pairs, I would actually say that EU and GU are looking very good for buy setups. They are fundamentally very strong as well. So I would definitely consider some buy setups. We could possibly get a bit of a pullback right here. Something like this, a bit of a pullback, and then some momentum up, which I would look to then go long, because right now it is slowing down on the top. It is very correctively moving right here. But yeah, I think EU and GU look really good. AU looks a bit flat. So AU does not look as good. Those are my 3 main dollar pairs, and I'm focusing on these 2. So AU is currently not on my list. The reason is AU, so the Aussie is fundamentally weak. The dollar is fundamentally weak. That's not a good combination. So I'm looking for combinations where one of the currencies is weak and one of them is strong. So EU or the euro is strong, dollar is weak. GU or pound is strong, dollar is weak. And also I spoke to my grandma yesterday.
Oh yeah?
I told her I'm gonna probably buy some S&P 500, and she was like, "Oh no, don't do it. It's going to the bottom. It's crashing. Don't do it. You're crazy." So I bought some more. So
your grandma is she's doing us all a true service by just giving us kind of the headline feel. I mean, yep. It's very common that she's just a human being, right? We all kind of feel the effects of the headlines. Oh my gosh, this the market is crashing, Bitcoin's going to zero, and no, it's a good contrarian indicator. And it's like I said, it's not just her. There's many people who I was saying this earlier on my stream. Man, I was scrolling through Instagram, and it's just like everybody turned into this doomsday bear overnight about everything, and it's like. Where there is absolute fear, I think there's an opportunity personally to step up and be be brave, buy the dip on some stuff that looks good, and we'll see. But maybe we'll get into indices and cryptos and stuff in just a bit. Miko, what are your thoughts on the dollar? I mean, I want to ask too. I'm just going to guess. Do you like euro and pound as well? I think all three of us. That's my guess. Is we're all going to like those pairs today.
Yeah, I'm pretty bearish on the dollar, so
Okay.
I'm looking to short the dollar, but at first I need a bit of a pullback, which hopefully we might be seeing over the next few days here. But yeah, really bearish move last week. My plan is just basically looking for the pullback of that for more downside. There's a few areas on the daily chart which I'm looking at to see if we can retrace into. There's also a level here around 104.5. So I'm looking around these areas for some shorts on the dollar. But if we take a look at Euro USD, I'm pretty much looking at the opposite, to be honest. So I like the low here, potentially around 107.7. And I like this area here as well. So it just depends how much of a pullback we get, because we were so bullish last week. Sometimes we only get some shallow pullbacks before price continues. Maybe we get a bigger one, but those are the two areas I'm kind of looking at. But yeah, very bullish on euro, bullish on pound USD, looking to buy the pullbacks on these markets. I like this range here for pound USD as well. And if price can pull back into that, will be absolutely great. But yeah, very bullish on both euro and pound.
Yeah, I mean, that's the thing, is what we're seeing here is just a dollar sell-off, and finally kind of seeing a little bit of a bounce on the dollar index. But I'm kind of with you guys on this. I think that, if you get a little bit of dollar bounce, it would be something that I'm a little bit more interested in selling into than not. I mean, the dollar index has definitely reached some oversold status. Doesn't mean that it can't get more oversold, but I think that you've started entering into kind of an oversold level. I'm definitely not long-term bullish at this time, but if you do get a bounce into some key areas, I think that might set you up for some really nice trend continuations on pound and euro against the US dollar, like you just discussed. Euro pulling back here a little bit. Pound looks really interesting to me, especially if you get a pullback into this 1.2770, let's call it, area. And I think that would be probably a 50% pullback from this recent kind of low to high. Yeah, that's about a 50% pullback. So I like the opportunity there if we do get some short-term dollar strength coming into the picture. But very, very curious to see where we go with that. Beyond just euro and pound against the dollar and just dollar crosses in general, Marco, what else do you watch? Do you have a chart of the day that's about the US dollar pair?
So I am watching gold, actually. Okay.
So
I'm in a more of a fundamental longer term buy setup, and it's running some profits. So I'm using a trailing stop loss. Still haven't trailed it though, still waiting for the price to develop. It's kind of better to look at this on the 4-hour. So yeah, gold just looks bullish in my opinion. The technicals are there. The bullish momentum is starting to kick back in. What is even more important, fundamentals are very bullish on the Edge Finder, which is a major confluence. So this would be my chart of the day. What I also like is the overall environment is pretty much in panic mode, risk off, and everyone is still pretty afraid of what is going to happen with the tariffs.
Yep.
And we have some inflation numbers as well that have come out. We have the Fed meeting next week, so that could be a big catalyst for some movement on the dollar and gold. So yeah, this would be my pick for the best chart. In terms of other charts, well, I do like actually some JPY pairs. I do like potential sell setups on the JPY pairs. It would probably be not the Swiss yen. I got stopped out on that one. So I'm looking at New Zealand JPY and Aussie JPY even more. So yeah, I would look for some further weakness right here. We do have a nice pattern of an ascending channel and this signature of momentum right there. So I would look for some sell setups if we can continue just a bit more with some more selling pressure. The conclusion is basically that I'm looking at EU, GU, gold, and AJ for now. So looking at EU to buy, GU to buy, AJ to sell, and gold just monitoring and seeing how that will develop. But the best chart would be gold.
Very nice. Well, on a note of that, we've been, or on a resumption of one of our conversations that we've kind of had every week on a relative strength basis. I think it's interesting to watch the metals, gold and silver comparisons, but also dollar and gold comparisons, I think are really interesting. Gold has kind of gone into a range. From a price action standpoint, I actually would have hoped that this drop off in the dollar would have given us that kind of move. That being said, you can actually see that the dollar index rolling over or kind of bottoming out in the short run seems to have no effect on gold. So that's kind of telling me that there's still quite a bit of geopolitical uncertainty and stuff that's just propping up the price of gold. It doesn't seem like, when the dollar index was on the up and up, right, trending up, we actually saw gold during that same period holding up just fine. I mean, this was, let's say, October into end of year, and October into end of year, gold went sideways, then actually ended up. So, or I guess started to go up after that. So held up very well. We talked about that a lot during that time, that relative strength, that holding up well against the dollar. These things are not one-to-one. Gold or the dollar down does not necessarily perfectly mean gold up, and dollar up does not necessarily always have to mean gold down. They're not a perfect inversely correlated pair, but definitely worth just keeping an eye on that relative strength. And I love that conversation that we have on the show each week. So speaking of relative strength with silver, Mika, are you watching silver? And also either ways, I'd also love to get your chart of the day. What are you thinking?
Yeah, so I'm keeping a close eye on silver. It's been a bit of a sideways move for silver for a while, but it looks like we're seeing some momentum and we finally broken through a big level, which I've been waiting for price to break through, and finally it looks like we've kind of got the green light on that. So as long as we stay above 32.3, I'm looking for a push back into the previous swing high here on the daily chart, which is back at roughly 34.8. So I'm pretty bullish on silver now, and pretty much just looking for pullbacks and entries on the 4-hour chart. Something like this would definitely interest me now that we're back above that level. And as long as we stay above, I would remain bullish. I like silver a lot more than gold. Again, I'm bullish on both of them, expecting higher prices, but of course, with the way I trade, since gold is right at the high, there's not a lot of room for me to work with just yet. Although I do think gold is likely to break out, but silver looks like it's got a bit more room, so I'm liking silver.
So we're red on the day, but not taking out Tuesday's lows. That's really going to be what's kind of critical for this week, is not taking out these lows, right? Not taking out these lows, or if we poke the lows, we get back above them. I can see the market manipulating a little bit. So for futures traded out there, I mean, you're accustomed to that stuff, right? Where the market comes in, test lows, test these levels. That could be like little liquidity sweep, and then all of a sudden we pop back. Doesn't happen as much in stocks and indexes, but the market can clearly play some games. I think the key here is that we don't close lower, okay? Especially going into this Friday, tomorrow, to end the week, we don't really want to see price closing lower, okay? So if we get a little relief rally, that is good. I am wondering if this is a little tiny bullish pattern. Maybe it is, but the market's clearly figuring it out. But if it takes out the low, we've got some more pain ahead. But taking out the low, if it pulls back, that would be that little bit of divergence, maybe like a little bear trap. So just because the percentages and the corrections, the technicals look pretty decent. I still wonder how bad the sentiment is, which should have printed today or prints end of day. I mean, look at this. So 226 was the 1-year bearish high on sentiment. Right now this is crazy. This is crazy. Like how consistent and how bearish this market actually is. This typically is a contrarian indicator. So this to me is showing if there's like record amounts of put buying, you don't see that crowd rewarded very often. So we are getting some bearish extremes here, but yet we're not seeing price. Price is not going the other way, right? Like price is stalling at these lows, not necessarily going back up. So I'm curious if we have that bit of a sentiment swing where things kind of ease a little bit, or this is just a nice contrarian signal where everyone's bearish and the market just decides to go back up. So anyway, we'll see. But this is some pretty wild stuff. If you take a look at the fear and greed index right now, again, the contrarian to me, extreme fear. I mean, Buffett's famous saying, buy when others are fearful, sell when others are greedy. When I'm seeing extreme fear, it's difficult to time. It may not be perfect, but at least in the near term, I think we could have some dips. Okay. We've got extreme fear in market momentum. We've got extreme fear in stock price strength. We have extreme fear in price breadth. We have extreme fear in the put option. So put call options. So puts extremes, like they're not crazy back to like where we saw it August, like August 5th when the market bottomed out. Everyone was just buying crazy amounts of put just in case, and ended up being like one of the strongest bottoms of the year. Back here in April, same thing. We had a 5% sell-off in the S&P, 6% in the NASDAQ. Everyone's buying puts at the bottom. So we're not quite up to those extreme highs, but man, I would not be surprised to see with record-breaking like put volume that extreme fear is going to be kind of the opposite trade. Market volatility, fear-based, safe haven, extreme fear, junk bond demand, extreme greed. That's interesting. Junk bonds, high yield versus investment grade. But okay, we're finally starting to see some pretty big shifts. And when everyone's crowded out on one side, I tend to think that it's wise to position the other way. I know. I mean, it's not perfect. I mean, look, sentiment itself is not a signal, right? Sentiment is not a signal. So this is probably more of an anticipation trade than, I don't know if it's George Soros or Druckenmiller saying where it's like, I'd rather step into the game after the game has started than, walking into something too early. So it was some baseball analogy where it's like, before the game has started, I'd rather, play the game in the second inning or something like that. I don't know, whatever. I'm paraphrasing. Point is, at these lows, anticipating these lows, I don't know if this is the low. I kind of would think that it is. I mean, I spent weeks and weeks and weeks planning for this market to correct, hedging for this correction, and that was good. So a lot of good things did happen here as far as making some gains on the way down. However, the velocity in which it fell and how one-sided it was also changed a lot of option prices aggressively. So for my ratio spreads and for my cash secured puts, I mean, those were out of the money plays that are now a lot closer to the money. Those deltas changed quite a bit, and those option prices traded quite a bit as well. So point is, if we are going to hold here, it would be kind of nice. So, I mean, and the wild thing is, even going back to like 2022, I mean, I guess if you want to look at like how bad could it get? Well, we obviously in 2022 had a nasty flush. That was a 12% drop that then pulled back a decent amount, right? So could it be that? Sure. But I don't see this market dropping like 15 to 20% without having a pullback. Go back to, I mean, are we having a COVID crash right now? I don't think so. Are we having a Volmageddon event right now? Not really. We've had persistent VIX. Are we going back to a great financial crisis? I don't think so. And even that was not straight flush, right? I mean, when this thing started to top over in 2007, it's still sell-offs. I mean, we went down around 5%, pulled back, right? When we had the nastier flushes, this went down around almost 9%, then pulled back. This was one of the worst flushes here. We go from this high to low. That's down about 16%. We still pulled back. So point is, I'm watching, and hopefully we have a little bit of a relief just in the near term. Otherwise, I'm going to be mad. What are the buy levels? I mean, probably low 200s. I mean, and Tesla it's got to be looked at as a long-term trade. Everyone knows it's volatile. Everybody knows Tesla's volatile. Okay. So, I mean, I don't mind this, like, low 200s as a bite. And then the rest would be, if it came down into like the 50s and 60s again, I would buy. I'm not going to say I'm going to load up on Tesla, but I would buy it for the long term. So that's what I'm saying. Even though I don't want the assignment here, I do think the ability to repair the stock is very straightforward. So if I own the shares, it would be owning it around like $248 or so. And even like I don't know, even an in the money call could probably repair this thing for $500 to $1,000. There's enough premium in this trade that I could protect some type of profit on it. So, but I also don't want like all these trades to be assigned either. So I'm just watching carefully. But if it was low 200s or in like this gap here in like the 150s, I mean, that is a ridiculous fail on Tesla's stock price. If this thing comes all the way back here and pulls back 69%, holy crap. But that's what makes a market. Things are nuts. However, if we have a 50+% pullback, we fill some gaps along the way, this would be an interesting spot to see if the market can stabilize this low and then work its way higher. So I think for me, the probably biggest threat that I have on Tesla is that my timing is off and I got too, I guess too aggressive on the time. If I'm out to April or May and we have any type of like seasonal rally, these are probably going to be good for income, and I'll still have one assignment that I'm going to, repair. Okay. All right. Let's talk currencies for a second. So today we have JPY on top and dollar, pound. Swiss is dropping a little bit, which is good. All my Swiss pairs, I'm just kind of hanging on to those for right now. But not a ton of currency volatility on the vertical axis. But I still like the positions that I'm in. Let's go Aussie CAD. Let me check one thing. 1 p.m. Yes, I can. Okay, Aussie CAD fine. Aussie Swiss just hanging in there. I've been scaling in since these lows at 56. 56, I did get like one position at 55 and 54. I did get some zero positions in when this crash happened in 2024. And that's it. And then I'm still prepared to kind of buy it down to that level if needed, but it's just going to be patient, keep the trade sizes small. Most of my positions on Aussie Swiss, if we're back above this level, I've got a lot of profit above that level. So this profit target, holding out to be a little bit more greedy out to like 6,000. Those are big payout levels if I'm willing to show the patience. But look, this is a pretty easy trade. You have a low, you have a high, and this thing is just showing a channel like so, right? So we're going up, we're going down, we're going up, we're going down. I still look at this as if you dollar cost average into to Aussie Swiss, eventually this becomes a trade that is going to pay out hopefully pretty well. Got to be patient. This literally might be like a 3-year freaking experiment for me. Not experiment, more like a 3-year investment. But it could be very, very lucrative. But that's what I see on the technical side. Aussie New Zealand, flat. Aussie dollar, flat. I'm out of that trade already. New Zealand dollar, that's break even. Dollar CAD, still garbage. Dollar Swiss, if it pulls back lower, 86 or lower, I'm going to buy more. Dollar yen, I just don't love it. I'm trading FXY and I'm out of 6J, which is my Japanese yen futures, but just watching. Getting some levels lined up here, 5,500. Still have that SPX trade pending at 50 cents. That might end up getting filled today. We'll see. Still watching the lows for the week. Lows are on 55.27. Let's see what else. CAD Swiss. CAD Swiss bounced beautifully off the lows. I like that trade a lot, actually, going back into these highs around 64. If this is a double bottom play, we get back to the center highs. That's target 1, but the best move would be that you double this up and go here to target 2. Again, big opportunities. I'm still bullish on this thing towards like 7,100, but a lot of my profits are below this level here, below this level here. So if I get to like 66 or 67, that is a big winner. CAD yen, watching those lows carefully. Just be careful on the yen crosses. I say that all the time. I mean it. Euro Aussie finally started to show some signs of topping. Again, this was a ridiculous run for over 1,000 pips, and I just wasn't surprised we saw a little bit of an interim top, but I'm not trading it. That's just jumping in front of a rocket ship. Same thing here. It wasn't surprising that we had a pullback, but you got to be just watching that thing 1 and 5 minute charts to catch a top on that. Euro Swiss, hopefully still pushing up towards my 98.80 profit target. Euro pound is back up to the 200 moving average. We had a nice little pop on that one for some profit. Euro yen, that was all euro related, not JPY. Euro New Zealand, same thing like Euro Aussie and Euro CAD. Pound Aussie, let me go Euro dollar actually. Euro dollar, I don't know. It's in a spot like, I don't like this spot. If you were long above 106, you had a nice little squeeze. If you're looking to do anything here, this to me is just noise. I have no idea if this wants to go up to 112. I have no idea if it wants to pull back to 106. So I don't think this is a good spot to be doing anything. A pullback, however, a pullback that stays like supported in this 105, 106 zone, I think that looks good for a retest of the same high, or possibly a run into 112 if the dollar is going to continue to get weaker. And as I said on the dollar index, if the dollar comes down to 101 or 100, there's still some room for the dollar to get weaker, which means euro could benefit from that as well. Okay, pound crosses. No top yet on pound Aussie. Just, again, I'm watching for some type of pullback because it's been just a mean run from 97 to, I mean, it's been a 900 pip move. Pound CAD, ridiculous. Over 1,000 pips. Pound Swiss, still bullish on this one. Pound New Zealand, I mean, I think a pullback is coming, but do not call the top here. Like, who the heck knows? So any type of topping pattern, okay, maybe a swing trade to correct, but I just wouldn't be fighting this stuff. Like there's something going on here where your euro is stable, pound is stable, your Asian related pairs, Aussie, New Zealand, commodity based pairs, they're not doing well. CAD is down, Aussie down, New Zealand down across the board. They're not doing well. So I would not fight that momentum. Euro or pound dollar, pull back into like the 2,700 zone, maybe have a bounce. So if it pulls back in here, trend line, maybe there's more upside, but again, watch the dollar index. New Zealand CAD, still fine. I'm just leveling into this thing all day long. New Zealand Swiss, leveling this thing all day long. New Zealand yen at the lows. This could be a pretty nice level. If we start holding this support, getting maybe on the right-hand side of this trend line, or just kind of carving out a falling wedge here, this New Zealand yen may end up being a really nice, asymmetry, like high reward to risk trade. Maybe, but I want to see it kind of structurally play out that way.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.